And after a third consecutive interest rate cut, Federal Reserve officials brought inflation worries back to the forefront as 2024 comes to a close. The Fed did what markets expected on Wednesday, but that did not stop investors from dumping risk assets in droves. Chair Jerome Powell bluntly said that the Fed's inflation forecast for the remainder of the year has kind of fallen apart. After nearly 4 years of failure, officials now anticipate that inflation will take far longer to attain their 2% objective. Powell said that any changes will depend on continued success in reducing price rises, and thus they lowered their expectations for rate decreases next year. After viewing a weakening labor market as the bigger threat in September, policymakers have shifted their stance to place higher emphasis on inflation. However, new data and Trump's policies have rekindled worries that inflation will remain stubbornly high beyond the central bank's 2% target. Policymakers now only expect 2 rate cuts next year, which is half the number of reductions predicted in September.
The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our 2% longer run goal. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point.
Now, the market's reaction to the Fed's revised forecast was rapid and severe. The US dollar surged to its best level in over 2 years, while Wall Street stocks and US Treasury fell. Despite being marginally higher before the announcement, the S&P 500 index had its worst Fed day since March 2020, plunging 3%. Fed's hawkish bias jolted Asian markets, with regional stocks and currencies tumbling. South Korean won fell to its weakest level since the financial crisis. The ringgit has hit its weakest level against the dollar since August, while the Thai baht also fell. Speculative assets, including Bitcoin, retreated and the price fell below $100,000. The digital asset fell about 1% to $99,800. That followed a 5.1% drop on Wednesday, the biggest retreat since September. For latest news, download the WION app and subscribe to our YouTube channel.